So today I'm looking at the results of a trade that I set up yesterday. And I set up this trade and I chose the stock using a Google Sheet system that I created that actually analyzes the stock price data and helps to find certain patterns by day of the week. And what I actually did is I bought this yesterday morning, and I actually did it, I automated it by having it buy at this price, which was a 5% drop from the previous trading day's price. So I set it up where I calculated 5% below Friday's closing price of this stock, and that was $24.47, and it bought, and I automatically bought just 2 shares of it. As you can see, it's in the $25 to $30 range, so I bought just 2 shares of it, small investment. And as you can see today, at this point, it's 9:43 a.m. and as you can see, it has gone up. It's fluctuating between 9 and 10% return on my investment at this point. Alright, so the price has gone up. As you can see here, you can see how much it has gone up from yesterday's close, about 4%. But the reason why my return is so large, like 10%, is because I bought it down. Right, I bought it at a very low price. Like I said, I targeted down 5% from where it left off. So because I got it so low, when it came up and then it went up even more, okay, the price difference between $24.47, which is what I paid for the 2 shares, and this price here, that price difference is 9%. It's a 9% difference. So it's not the dollar amount, but it's the actual percent. For those who are not familiar, it's the percentage of change that you profit from, right? So this is about a 10%. So the interesting thing about this, this is actually a new approach to trading that I'm trying using data analysis with the Google Sheets, with Google Sheet systems. The interesting thing is that I did not do any charting or anything. I did basically a data analysis that I kind of explained a bit in the video yesterday. But basically, I pull the data for the stock, and then I pay attention to certain common, consistent price differences between certain days of the week, and that's basically what I did. And from that, I was able to kind of figure out certain normal behavior where it tends to jump in price on Tuesday. Is what I discovered with this, right? I saw a strong tendency for it to jump in price on Tuesday compared to the price on Monday. So again, I just tried to get in on a low price on Monday, which I did, with the expectation or the hope that it will do its more prominent behavior, which means what it usually does, of going up significantly on Tuesday. And as I can see, it has done that. Now, if you're watching it like I'm doing right now, the danger in this is that we can get emotional, hoping that this will hit like 20% or something crazy, but often it won't. And what can actually happen is, especially with certain kind of like volatile stocks, is this can come right down, and I probably would not lose any money. I mean, I could still sell at a profit, but I probably won't make as much as I expected, or I could have made, because I let it drop too low. So I mean, you can watch it, which is what I'm doing at the moment. I'm really only watching it because I'm making a video. And I'm also just kind of studying the way that this kind of moves, since I am available right now to do that. But I just want to point out that it's not necessary, and typically that's not what I'm going to do because I'm doing other things. And so actually what I would normally do here, or what I'm going to be doing, is set in a certain percentage ahead of time that I think it could go up. So for instance, I might have set this to, I could have set it for like a 3% increase today, right? Set a price. In other words, this is what I mean. You could take 2 different ways you can do it. One way is you can take the actual cost, right? And you can calculate how much you want to make on it, right? So I could do like $24.47, and then I could increase it by a percentage I want to make. So let's say I wanted to make like 8% return on this, right? This is the price. I would multiply by 1.08, and this is the price I would need to sell this at to make an 8% return. if I had done that, if I had programmed it to sell at 26.42, it would have sold already, because obviously we're already at 26.83, right? So this would have already sold today. I would have made my 8%, and I would have my 8% profit sitting in my account, right? My Robinhood account. The danger, because we need to be aware, and I don't really want to say danger, but the thing is, with that, sometimes you can set it too high. So for instance, you might have said 24.47. You might have expected to make, like, you know, let's say you expected to make 10% on this or more, like 15%. I mean, that's kind of high, but I mean, it can happen. But let's just say you thought you were going to make 15% return. That would be 28.14. But now it might hit 28.14 today. It has time. It can still happen. It's early. It's only 9:48. But let's just, for argument's sake, or just as, you know, for an example, let's just say it did not hit 28.14 today. Well, what's going to happen if you automatically set this to sell at 28.14? If it does not hit 28.14 today, it's not going to sell. Okay, you might say, well, no big deal, right? It doesn't sell. Well, the potential problem is that if it doesn't sell, what if the price drops all the way back down? Okay, and then, you know, maybe it. Now again, if you get in low enough, like I feel like I got in pretty low yesterday. But if you get in low enough, you might still tomorrow be profitable. Okay, it could drop down here, and you're still making profit. Right, that can happen. In fact, I started out the day making profit. Even when it was down here, I was at 25.26 because I got it at 24.47. So from when it opened up at the bottom, I was already making profit. So even if this drops back down to here, I won't make as much as I would have hoped to make, but I won't lose money either, right? But the potential risk in general, when you target automatically, is what if it does drop below? Then you could lose, right? But overall, as far as trading goes overall, for those who are not too familiar, we don't worry about those losses because, again, the expectation is to make more gains than the losses. And so, and also, what I do also, split up your funds. All right, if you notice, I'm starting with a very small portfolio here, only $100 in this Robinhood portfolio, because I'm actually not an expert. I'm actually relatively new to trading. And I'm not new to data analysis in Excel. I'm a programmer of sorts, but I am new to trading. And so basically what I did is I did not even put the whole $100 on this. I only took $50 and bought 2 shares. Right? I could have taken the whole 100 and bought 2 shares. Instead, I only bought 50. Right? I only used half of my portfolio money. Okay, the other half, I just programmed it to buy another 2. Okay, and I'll see if those 2 drop low enough, it will buy them. If they don't drop low enough, they won't get bought. Okay, so I have these other 2 that I set up, and we'll see if they happen. All right, I can go to my messages, UR Energy. It's saying we received your order to buy. As you can see, I set this up to buy at 169. This is a different stock, and it looks like it just happened. Okay, it says your order was filled, so it did drop and the order did happen. I'm going to go to my portfolio and see how that one is doing, and as you can see, that one, URG, it's already making money too. All right, now this one I also programmed to buy today automatically, SGOC. I programmed this one to buy at 587, but it kept dropping even lower, right? Would have been nice if I had set it to buy even lower, right? I could have set it lower because, as you can see, it dropped like so much lower, right? So, I mean, it's not perfect. We can't always know everything that's going to happen, but based on the usual behavior, it goes up a lot into, I think it's Wednesday, what's tomorrow? Wednesday, right? Wednesday. All right, so what you see now is not necessarily how it's going to end. Also, this loss is not so bad. This minus 0.68% is not, this is not like a huge negative loss right now. And see, the thing is, These that I'm playing with, these are volatile. These I wouldn't actually suggest starting with the kind of ones that I'm using in this video. I mean, I've been doing this. I started with just non-volatile, but I've been at this now for months, maybe a year off, but on and off over the course of a year. So now I'm kind of ready to play with these volatile stocks using analysis. But if you're just starting out, I wouldn't really play with these. I would play with Apple or just something normal like Tesla. Maybe something that's not just so crazy like these penny stocks, which are just all over the place. So I'm going to go back to the portfolio and just, again, you can see what's happening. This is one I just bought today. It's making money, 0.27% so far. Here's another one that got bought today. These got bought automatically. It's losing a small amount so far, but I expect that it could go up and then I could be making money from it. Okay, and then here's the one that I bought yesterday, which I was just talking about. And as you can see, 10%. So what I really want you to pay attention to here is not the dollar amount that this is earning, but rather the percentages. Look at this. Now I'm at 11.28%. The thing about this return that I'm getting, these returns, this is literally overnight. I literally bought this yesterday morning. Okay, so I purchased this yesterday morning. Today it's at 11%. What bank account do you know where you can return 11% on your money overnight? Now, even when I do other businesses, and I'm going to go back to the portfolio and just kind of look at what's happening here overall of my three stocks here. But tell me what, there's really no bank that does that, can give you these kind of returns. And even in other businesses I also do, like e-commerce, sure, when I do certain orders, it's possible you can have a 30% return on investment, you could have 40, you could have 50% return or even higher on an order of a particular product. The thing is, you don't get, you have to make a purchase first, so you have to spend money that you have to go without that money for a good while before the marketplace you're selling on even pays you, whether it be Amazon or eBay or anything like that. So when you count the time it takes for them to actually pay you, the time that you have to be without the money that you use to purchase the goods that you're selling, when you put all that together, actually when you divide it, you're still only making, you're actually per day, you're not making that 50% in one day, not really, right? If you do a 50% ROI on an order in e-commerce, you're not actually necessarily getting it that day. All right, not always. I mean, it can kind of vary from model to model. But also, now that doesn't mean I'm not gonna continue doing it, but it's just that there is a difference between that and trading and getting kind of like a return immediately. So actually, what I suggest if you're in some other business is you actually do both. You do your business and you make your profit, take some of that profit and put it towards this. The other thing that I want to really point out about this is that this can be very effortless. There's no customer service. There's no customer. When I bought this IRNT, 2 shares yesterday, all right, and then if I sell, I can sell it right now and make my 10% and leave. I'm not dealing with any customers here. There's no customer to deal with. There's nothing. It's literally just pushing a button to buy, pushing a button to sell, and collecting the money from it. Okay. Now we can see this dropping. All right. But then it will come back up. It can drop up and down. So this is where the risk comes in and watching. So anyway, I'm going to watch this and decide what plan. I'm not too worried about how much it's going to make right now. I'm more in a studying phase of how these things behave. But of course, I'm going to make sure I make a profit from it. But this is basically how it works overall. So anyway, if you like the video, just go ahead and subscribe to my channel. I'm going to be doing more of this. And I want to show more of the analysis process that I'm doing. I just wanted to kind of show these trades that I just set up, but I want to show more of the actual analysis process that I'm going through in doing this. So definitely subscribe to the channel. I should have a link for you to go ahead and get a copy of this Google Sheet if you want to take a look at it and start get an idea of what it can do. And if anything, I'll see you around the channel in another video. And I'm going to get back to this, focusing on this stock here.